Hello everyone, welcome to the Ichimoku.co daily market review for the trading day ending Tuesday, February 24th. Well, firstly to the S&P 500, and here we see the buyers coming back into the market today, extending with a new higher high and higher low. A white body candle today as opposed to the doji type candle with no body from the previous day's trading. And that was a day where the market opened up at the high and closed back up at the high. So the buyers and sellers made no net progress on the day, and it did suggest that there was potential for a change of trend on that day. Now, with the strong support below at 2100 and then below there at 2093, it was always a very strong possibility that the trend was going to continue to the upside. Today we've seen the buyers increase that white body, as I've mentioned. It suggests that the buyers have found a decent amount of upside momentum, and it suggests a good possibility of the trend continuing. So we'll be watching the high at 2117, which by the way is a new major high. We'll be watching that for a continued higher high and higher low. Now, we did see some loss of commitment in the day as the market closed. It closed just off the highs, but not significantly so for there to be a suggestion that we could see any major retracement. If we do see a retracement, we are still likely to see that round number 2100 and just below hold as strong support. In terms of trend, we do have very strong uptrending price action in all three time frames. The market's trading above the cloud, above the Kijun-sen and the Tenkan-sen, and all of that price action, all of that strong trending price action, is supported by the Chikou span being above the corresponding price action. It does suggest that if the market does come off and breach the 2100 level and the 2093 level, that we should see strong support coming in at the Tenkan-sen indicator around 2087 at the moment. And that indicator is pointing up rather sharply, as is the Kijun-sen, reflecting the strong upside momentum in this market at the moment. Just looking at the Fibonacci Extension, and we've seen the market trading through the major levels, the 38.2, the 50% and the 61.8% in a bullish manner. And for today's trading, we've traded through and closed above the 78.6% level. It does suggest that there's a good likelihood of the market continuing to trade higher. And our next target here will be the 100% level at 2133. Now, with the Fibonacci retracement technique, we have seen the market trading through the 100% level in a bullish manner. We did see some a minor rejection from there previously, but the market then went on with the move, trading through the 161.8% level, finding support at that level and bouncing off there. And our target here now is the 261.8% level at 2121. Just looking at the bands here with the S&P, and here we saw previously the bullish breakout, the retracement, the strong bullish follow through, and the market a couple of days ago finding support at the upper band. With the market trading above the upper band, it suggests we have a very strong bullish bias in that medium term time frame, and if we do see the market come off, we're likely to initially find strong support at the upper band, trading roughly about the 2100 level at the moment. Moving next to gold futures, and the candle we're analysing is the second last candle on the chart here, and a very important candle in light of trading that has opened up quite bullish. For today's trading, as it's finished, we've seen a continuation of the trend to the downside, but another small body candle, so the momentum that the sellers were creating to the downside was becoming less and less as this downtrend developed further on its way and tested down to the 1200 round number level of support. We saw the buyers for today's trading take control of the market by closing up towards the high, and that's in contrast to the previous day's trading where the market closed roughly around the midpoint level, suggesting that neither side had control, and that was in line with the previous day where the sellers had very weak control of the market. So a switch in control away from the sellers to neither side, and now for today's trading to the buyers. This is a potential bullish tweezers bottom pattern. We have the downtrend in place, the two lows roughly around the same area, looking for confirmation, and we are seeing that with today's candle as it is currently developing, with this candle forming a higher high and a higher low. Now, bearing in mind that trading hasn't finished in this candle, it's only just opened, but it certainly does suggest that on the back of the buyers closing with control in today's trading, and the strong support that we've seen for the last 4 or 5 days below the 1200 number, we are seeing the buyers coming into this market. Now, the problem for the buyers is going to be the potential resistance around the Tenkan-sen indicator trading at 1213 at the moment, and the resistance within the Ichimoku cloud, as we've seen for the last few days trading. So we may not see the market trade through here significantly. But if the market can breach the Tenkan-sen, we may be finding some resistance around the 1216 or 1218 level, a previous support and resistance level. In terms of the trending price action here, very clear downtrend bias in the medium and fast term timeframes by trading below the Kijun-sen and the Tenkan-sen, and supported by the Chiká span here being below the corresponding price action. But the market closing just around the Ichimoku cloud suggests that we don't have any clear direction in that longer term time frame, and there is an opportunity here for the sellers to change that in the longer term time frame if we see some selling coming into the market, and if the market can breach down below this round number 1200. But that may be a big ask for the sellers at the moment in light of this current candle as it's developing. Now, just looking at the Fibonacci extension of this candle that has finished trading, and we are in a downtrend, and we're examining the relationship of this current downtrend that the market is in officially, and we can't really rely on that last candle yet because it hasn't finished trading, and we're comparing that downtrend to the previous time the market is trending down. And if we look here closely, we see for the past 3 consecutive trading days the market tested through the 61.8% level but was unable to close down below there, and for the past 2 trading days the sellers have lost commitment, with the buyers then taking control back in this market. So this sets the market up for the potential change of trend that may be occurring at the moment. And next to the Fibonacci retracement, and here we see the market for the 3rd consecutive day testing down through the 100% level and being rejected from there. Buyers taking control, as I've mentioned, in this current candle, setting the market up perfectly for that change of trend to the upside. Moving next to the Euro US dollar, and here we see very uninteresting trading continuing here in this market. The market moving sideways in this congestion area. A breakout down below something of a barrier that was drawn, something of a symmetrical triangle, closed down below the bottom barrier on that candle from the previous day's trading, suggested that we certainly could see the market continue to develop to the downside. But we didn't see any strong follow through following that close down below and the confirmation of the pattern, and I'd be tempted to redraw the pattern to find one of these troughs down below as a bottom barrier once again. And there we are with this pattern redrawn. Now, today's candle has been a very unimpressive candle, a very small body. The opportunity was there for the sellers with that candle, building a black body candle, and one of the larger black body candles that we've seen for the last couple of weeks. But with the sellers losing commitment down around the lows here, and the buyers coming back in, and the sellers only taking a moderate amount of control, there was some doubt about whether we would see the follow through, and we haven't seen that. With today's candle, the buyers have closed with control. So we have this market moving between the buyers taking control, the sellers taking control, very weak control, the sellers losing commitment as they test down to these lower levels at this very strong previous swing low, and it does raise doubt about the direction of this market at the moment. Now, with this congestion area that's forming, we will need to see either a bullish close up above the upper barrier or a bearish close down below the lower barrier, and then some strong follow through to confirm. Now, in line with the market being bearish in all 3 timeframes, it is more likely that the move will be to the downside, but we still can't discount a breakout to the upside. Now, just above where the market's trading at the moment and where we've found resistance for today's trading and the 3 candles prior to that, we have the Tenkan-sen trading at 113.64 and the Kijun-sen trading at 113.86, and then above there we have the 114.59 level. Below the bottom barrier of this congestion area, however, we don't have any immediate resistance based on Ichimoku or anything else. And the next move, if we see the market breach that bottom barrier, could be and move down to 111.60, and the market could do that quite easily. Now, just looking quickly here at the euro on a weekly chart, and this really does put things in perspective, and we see this very strong trading down below the Ichimoku cloud firstly, and this has been a great indication to the overall direction of the market back here in when was it? Late August, when the market breached the bottom of the cloud. We saw the strong bearish follow through, and then the Tenkan-sen holding as strong resistance. For all of that time, the market hasn't been able to close below the Tenkan-sen indicator. The market is looking a little overextended in the depth away from the cloud, and from the Kijun-sen and the Tenkan-sen, and the depth of the Chikou span away from the corresponding price action. So looking a little overextended, but no strong sign here yet on the weekly charts that we are seeing the buyers coming back into the market strongly. If we look at these candles here in this attempted retracement, they've been all very small body candles, a couple of doji type candles where the sellers have taken back control. The buyers have not taken strong control in any of these candles in the retracement. And then for this candle, it has finalized trading, the second last one there for the week, we see that doji candle. It suggests that the sellers could come back into this market. So we will be watching the lows of these candles down around the 112.78 area. 112.78 for the market to close below there, and a possible test down to this previous swing low around 110.98. Now, just taking a look at the hourly chart with the euro US dollar for the day that has finished trading, we saw at the open of trading the market found it very difficult to breach through the Kijun-sen and the Tenkan-sen indicator, holding as very strong resistance for approximately half of the trading day. The market then found some buying, rallying off this doji type candle, changing the trend to the upside following a very large black body candle in terms of the recent candles, and attempting to rally through the Kijun-sen and Tenkan-sen, but finding resistance around the Ichimoku cloud and the middle pivot point level, and that middle pivot point level held as resistance for quite a few hours, for probably half a dozen hours into the close of the trading session. Now, for today's session, we've seen the market open above the middle pivot point level, and that's quite interesting, and that may provide some very solid support if we do see the market trading down to those levels, as may the Kijun-sen indicator at 113.28 and 113.23 respectively. The problem for the buyers here is going to be the top of the Ichimoku cloud, roughly around the 113.40 level, but if the buyers are strong enough to breach through there in a bullish manner, we could easily see euro US dollar testing to the first pivot point resistance level at 113.69, or even perhaps beyond. At the moment, we're seeing support coming in at the bottom of the Ichimoku cloud at 113.53, and with the Tenkan-sen trading there, roughly 113.41, it is going to be a very important area of support for this market. So we have the market bound between this solid support below and solid resistance overhead. But if we see a strong bullish or a strong bearish breakout and then some strong follow through, we could see the market develop quite strongly in terms of trending price action on the hourly charts.